This video is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Today we're going to look at Pfizer. Not so great chart, cheap stock, high dividend, but maybe it's turning here. Let's take a look. So we pop up here on the home screen, and again, we're going to look at 50, 100 results. The first thing I noticed was all of these Johnson & Johnson trades, and it looks like they had their exchange today. So you could see all of these trades traded together. You'll see puts and calls, puts and calls, puts and calls on the 210 line. Stock is only trading 168, so they were deep in the money puts and these teeny calls. Now, why would they do this? Well, they would do this to basically buy puts. They also buy stock 1-for-1, and then they sell these calls, and it's called a conversion trade. Won't go into the explanation, but it has nothing to do with giving you directional signals per se. In this case, they might give you a slight signal that people are valuing this KVUE that's coming out. And so maybe there's a slight signal there. But in general, these conversions are not offering you any directional signal. So you can get rid of them or not pay attention to them unless you want to play this sort of exchange type of trade. So I'm going to click no spreads and we'll see the Johnny Johns disappear. I'll click greater than 2 weeks, and I will also click the ask side. We have PayPal, Ford, Nikola. These are options in general, the dollar stocks, DNN. Here's the KVUE that's actually trading today a little bit. Someone's selling puts, probably didn't get the stock. And Bumble looks like a put seller. One trade that I did see this morning that is now off the charts because it traded in pieces was Pfizer. So right at 933, 942, 943, 943, 940, you could see here at the times that they were coming in, and they were coming in to buy calls. Okay, calls. And then this one, 36 puts. Okay, 933, but mainly calls. And one of the big ones was September 1st, 37 and a half calls. And those traded about, it looks like about 7,000 right out of the gate. So it was 2, 5, and 6. It was creeping up. So the September 1st, this caught my eye. The stock is, start with valuation, fairly cheap stock on a 12-month trailing. It's 9.9 PE, dividend of 4.42%, pretty high. The forward PE, just look at a forward PE for Pfizer's 11.15 right now. So let's call it 11. And SPX forward PE is probably 19 or 20. 19.76. So Pfizer's trading at about a 40% discount to the S&P 500. Why is that? Well, one, drug stocks trade a little bit lower anyway, but the main reason is that they have made a significant amount of money during this time period from COVID start to the going into the end of 2022. And since then, the revenues have been essentially coming off a little bit, as you can imagine. So everybody's getting the vaccine. They're making a significant amount of money. I think they made over $100 billion over these few years. It's a big business. And now the revenues are, the growth in that is slowed. And you have a situation where numbers are going the wrong way. Time has passed, which means patent cliffs are nearing. They did buy some companies for growth, but I'm not sure if that growth is going to be seen in the next year or two. That's more of a longer term play. However, you have potentially a seasonal trade here where the flu season is upon us, and you're hearing more about a new COVID strain coming to the flu season. You are likely going to see more articles like this. COVID vaccine stocks jump as new variants emerge ahead of fall shot rollout. The shots are expected to provide protection against newer variants of the virus, including EG.5 or Iris. So you have likely a lot of news coming out on vaccines and new variants, and all of that should likely give Pfizer a boost. You see today that the stock is up 1%. It's been up for the last 4 days here. So if we take a look at, let's just look again one more time here at the weekly before we get into the details there. But, the stock had traded as high as 58, 53 was another level. But in general, you could see the thing is straight down here. Okay, straight down. Now, we are back to levels of 2018 highs, 19, even 20 rejected, and then it went through in 21. So we have made this huge turn here. Okay. So this is the weekly. Now I just want to get into the daily chart. Let's close this, get into a daily, and see what we have here. Again, just a stock that has gone straight down from 53. It's trying to have a little bit of curvature here, I guess. Trying to be positive here on this. Okay, so a little bit. You have this level here at about 37.5, and then clearly this level at 40. So we have some levels above us that are going to be some roadblocks, some stop signs. However, when you're seeing the amount of flow that's coming in the morning and it has continued, I think people are waking up to this potential event, if you will, coming up over the next 2 months. I believe the vaccines are rolled out in the middle of September. I think the news flow will be consistent over the next 8 weeks. And this is a big moneymaker season for Pfizer. They are big advertisers, and likely the media will be updating on the data coming out of the hospitals and COVID. And there's even talk, the New York Post had an article talking about potentially masking up again, which would be a big deal. So any type of news like that is likely going to give Pfizer a boost higher. And so that's something to think about. I think it's an interesting play. And again, cheap stock is really a long-term thing. But when it's a cheap stock and there's this event flow and it goes counter to what the negative story has been, which is vaccines are a bad thing right now for Pfizer because the revenues are going down and it's weighing down Pfizer's growth and all the negative talk that negative revenues would have, that switches to, wait a second, maybe vaccines are not dead. Look what's happening. There's going to be new variants and new this, new that each year. And this is going to be a yearly thing where everyone has to get the boosters or the next shot. And that bodes well for revenues. So if you look at last year's flu season, you're talking about right around here, and you can see what happened. We had Omicron and then just shot up for about 4 or 5 weeks in a row. Could that happen again? Why not? I think, again, 37.5, 40 are your big levels, and then you get earnings in November. So we're looking at, I would even say you're looking at this one as well. Okay, so these are sort of your levels that I would be paying attention because this is February low and this is the rejection here in April. So you have 37.5, 40, and 41.5. So there you go. Coal buying and Pfizer, cheap stock, high dividend, some hair on it. However, the vaccine noise is starting to pump up again, and we'll see where that takes it. Don't forget to smash that like button, comment, ask questions, and I'll see you tomorrow.